What five stocks have people made the most money investing in the stock market? It's historically rewarded long-term investors, with certain companies delivering exceptional returns over extended period of times. Based on comprehensive analysis of the U.S. stock performance, here are five stocks that have generated substantial wealth for its investors. Altria Group ranks number one, formerly Philip Morris Tobacco Company. Altria delivered remarkable returns. With Vulcan Materials Company, specializing in construction materials. Vulcan has demonstrated significant long-term growth. In fact, if you were to invest $1 in 1925, you would have $39 million. Kansas City Southern, a railway company, has provided substantial returns as well to investors. NVIDIA Corporation, they lead in the technology sector, processing units, GPUs, and they're a standout performer. Lastly, Johnson & Johnson, major player in healthcare industry. They're always delivering strong returns. Okay, now we're going to look at the companies, five stocks where people lost the most money. We have WorldCom, a major telecommunications company. WorldCom filed for bankruptcy in 2002 amid an accounting scandal, leading to shareholder wealth losses an estimated $102 billion. Rivian Automotive, an electric vehicle manufacturer, Rivian experienced a significant decline in stock value, resulting in shareholder wealth losses of $92 billion. Vavia Solutions, formerly part of JDS Uniphase, this company saw a big decrease in market capitalization with $87 billion of losses. Lucent Technologies, a telecommunications equipment company, shareholder losses with $85 billion. And lastly, similarly, NVIDIA, actually in 2025, January, there was a big market capitalization loss of nearly $600 billion. And my friends, this is all from Financial Times. This is from Market Watch. You guys can fact check me. This is from Visual Capitalist. So we're going to look at the similarities across both categories. And we're going to see the differences here in a moment between the high performers and the underperformers when you think about investing into stocks. So the similarities in both categories, the tech industry, best and the worst performing included tech companies, which is NVIDIA. I think NVIDIA is a very volatile stock, so it's a little risky. Large established companies, both lists include companies that were leaders in their industries, such as WorldCom for telecommunications and Johnson & Johnson for healthcare. Now, let's look at the key differences between high performers and underperformers. The industry stability. High performers, these companies often represent more stable or essential industries like healthcare, like Johnson & Johnson, materials like Vulcan Materials, or like transportation, City Southern. More stable or essential industry is what they're more leaning towards. The underperformers, their stocks rapidly evolved and had high competition in their sectors like telecommunications, WorldCom, Lucent, and emerging technologies like Rivian, the electrical car company. We'll also see that the worst performing stocks often suffered from corporate scandals or poor management, like the WorldCom's accounting scandal. In contrast, the best performing companies typically benefited from sound leadership and long-term business strategies. So growth versus hype. High performers, these companies generally have long-term sustainable business models that slowly compound returns. Underperformers, many worst performing stocks experience rapid growth or hype before facing significant corrections, like Rivian in the EV sector. I think the key takeaway from this is investing into stable, diversified industries and companies with a history of strong management and sound business practices tends to generate more long-term wealth. Conversely, companies with hype-driven valuations or poor leadership are more likely to lead to significant losses.